Dust off your back, don't look back. Give all the dollars, you know, a fake heart attack. 'Cause you were made for this. You can feel it inside your bones. You were made for this, and it's time you let the world know who you are, what you know, it's happening right now. So
Yeah, two mics. Yeah, go ahead, start.
Hi, my name is Seaman. Hi. Sorry, I want to do that.
Clap.
So I run Rakuten Ventures. We're a corporate venture capital firm and out of the e-commerce company, we've been in operation for about 7 months, committed and made about 3 investments. So it's good to be here.
I remember the first event that I went to, there were 35 people. So seeing this here, like what is happening here, is it's quite exciting. About myself, I'm started Rocket Internet here in Southeast Asia. I was quickly with Rocket in India before, so I was among the first co-founders, Zalora, Lazada, Foodpanda, and so forth. Right now I spend around 20% of my time with Rocket and 80% of my time with the Global Founders Capital, which is our new venture capital fund.
So before we go in, I'd like to get the audience to kind of submit questions to us via the KakaoTalk app. Follow Startup Asia, okay, and send us questions in, and I have iPad here to see your questions. Okay, so first let's set the ground for today. Can you give us an overview, Stefan, we talked about this earlier, an overview of the investment climate here in Indonesia and the region?
Sure. I'll travel quite a bit between different continents because we have a global investment thesis, so I see different startup scenes, but I live in Jakarta, so here's like, this is home. But if you look at, just to put things in context, like Europe, for example, you have every year around 2,000 new tech companies get started up, and you have around 50 Series A finances. So, you know, you see 50 Series A finances, how large the kind of venture pool is, like how much, you know, people invest. The US, you have around 10,000 tech startups every year getting created, so 5 times as many as in Europe. And you have 400 Series A finances, so you have 8 times as much venture money. And the rounds are even bigger, so it's probably more than 10 times the size of European venture funding. If you know, in Indonesia, for 2013, we have probably will come to around 30 venture capital investments across all stages. So it's, you know, comparably smaller, obviously, to more established markets. But when we look, you know, 2012, we had 20 deals. The year before, we had 18 deals. So it's growing quite fast. So it's still on a smaller scale, but growing fast.
And investors like yourself and Rakuten Ventures, I mean, you're not from Indonesia. So are there a lot of investors coming in into Indonesia and to Southeast Asia now? And Tom, you've raised like over 160 million across all your startup ventures. So have you raised from Asian investors, global investors?
Yeah, my first 140 million was all Silicon Valley US investors. And when I first came out here, even the first couple of rounds, I still went back to Silicon Valley. I did realize that well was drying up after a while because people started to realize that I don't actually live in the valley anymore. I would go there, I'd spend a month there to raise money. I'd wait till the money's in the bank and I'd go back to Singapore and say, oh, by the way, I forgot to tell you that I live in Singapore. They don't like to invest in anything they can't drive to, and it's kind of hard to drive to
Although
Singapore.
Silicon Valley is one of those places whereby you pop in once every 3 months and then people assume that you live there, right?
Oh, yeah, because even when you live there, you only see them once every few months, so there's no difference there. And I still have a house there, but you know, word got around in the valley that, hey, I don't live there anymore, so, and these people invested in a company and they never get to see the CEO, so that wasn't good, so I thought I should raise local money. As we started to go into some of the countries, I realized I could also have, my investors were very helpful early on for establishing credibility, helping introductions, helping with employees. But later, as you grow, you need help in local markets. And when we're going after Japan or Indonesia or India, my investors back in the Valley were minimal value tactically. So I started to look in the local markets, and we raised money from a company called Westbridge, which now is Sequoia India, largest, probably the most successful VC in India. We then raised, as Singtel was starting a fund, Innovate. Singtel, largest company in Southeast Asia. I thought they'd be a good partner because they own large shares of Telkomsel, AIS, Globe, all the major operators around the region who we work with. They've been a phenomenal partner for us and have done a good job of keeping Innovate very independent of Singtel. And then the last round we raised from one of the largest funds in Japan that's been around Japan for many years, Jafco. Jafco, I think something like 20% of Jafco's companies the last 20 years, or 20% of Nikkei in the last 20 years, the companies gone public on Nikkei are Jafco companies. So literally every time I go there, they pack my schedule with the who's who of Japan, and have been extremely helpful for us breaking into Japan, historically a very insular market. So I have found raising money in the regions you're going after to be extremely helpful. It's a very, very different process. In Silicon Valley, I got it down to a game where you do all these sorts of tactics, they play off at one another. And I remember my first time I was raising money, and I had a friend at Kleiner, and I went over and had lunch with them, and Kleiner has all their cards in one conference room for all the partners, and so I picked up all the cards, one of each, and I put them in my pocket. My next meeting was over at Sequoia, pitching Sequoia for my first time. And I pulled out my business cards, I had all the Kleiner cards on top, and I said, oh, hold on, sorry, that was my last meeting. And I'm flipping through John Doerr and all these guys, and then I get to my cards, oh, here's my card. And you can just see their eyes like, oh, wow, Kleiner's already in on this deal. And it's very, very competitive. Then I went to Excel, and I put, on the slides, I put, Sequoia partner meeting. And it's a very defined process where if you go to the partner meeting on Monday, that means they're in or out, and they like you, and they're moving forward. So if you made it to the partner meeting, it's a good sign. So then Excel's like, hey, we got to invest in this guy. Look, Sequoia's investing in him. And so it's built on, I always like to think of it as little kids on a soccer field. I don't know if you've ever seen like 2 or 3 year olds playing soccer. Wherever the ball goes, all the kids go. There's no concept of spreading out and passing. It's like, the VCs are the same way. And that's how it works in the Valley. Here, you don't have as many players, it's not as competitive, and it's not as standardized or mature. So you don't get a term sheet, change a few things, close it. Here, I found myself having to give term sheets saying, hey, this is the Silicon Valley way, this is the way I'm going to do it on these terms or else. I find my legal bills being, instead of $10,000 post-closing, it's like $80,000. And so there's a lot of overhead and friction in the system. A part of it is investors have to protect themselves more. Part of it is it's just a more immature system. But once you get through the process, it's quite beneficial to have local investors.
So here for entrepreneurs looking to raise funds here, how should they get started? Which investors, how do they get noticed by investors? And how do they approach them? Cold call, cold email?
So cold call never works in any part of the world. It works, but automatically they think lower of you. Introductions is the best way, and you have to think about who's introducing you. Introduction from just anybody is not great. And even if it's an introduction from someone they know well, if you don't know that person well, you might think it's a good introduction, but behind the scene, people are always trying to protect their reputation, so they'll send a follow-up email saying, hey, I don't really know this guy, I met him, seems interesting, but that's not a great introduction either. So the warmest introduction, the best introduction you get from someone that knows you well, believes in you, is the best way to get time. And every time I introduce someone, I get an email right afterwards from that fund or that VC saying, hey, what do you think about this person? So there's a lot that goes behind the scenes that you don't see. But it's rare as you get past certain rounds to have cold calls end up in an investment, at least anything substantial. The other thing I would say is the brand and the investor early on matters a lot. So I feel like every time I've taken money from Sequoia, my next 3 rounds were free passes because everyone wants to be at the board and around the table with Sequoia. And so thinking about who you have, at the end of the day, lots of VCs are brand bitches, whether you like it or not. So getting a good, established, prestigious brand goes a long way in raising your next funds. And once you get one of these follow-on funds with a tarnished reputation, make sure that's the last money you ever have to raise, because it's seen as, I'm not going to name names, but there's VCs out there that are well known as desperation money, and if you have that money or that fund in you, you're not raising any more money, at least not by any established institutional investors.
You see, but a lot of entrepreneurs may not know this. So I'm going to direct a question now to Seamin. How should they, when they go to you, how should they approach it? They may not know you, and how do you get a deal flow? And how should they talk to you?
Okay, so how do I get my deal flow? I read Tech in Asia.
Yay!
Shit,
And you're here at Startup Asia, right?
Yes. But more than anything, I'm really on the ground. I essentially visit and skulk around all the little tech conferences. So for example, I'm keeping myself in the back right now because of course I'm happy to attend the Tech in Asia, but I want to actually attend the Tech Live for NUS because there's a lot of great companies that come out of there.
That's in Singapore, right?
Yes, that's in Singapore right now. I will go to all the technology hubs and all the schools and ask them random questions, and they're like, "Who the hell are you?" I introduce myself. But that's actually one of my strongest deal flow pipelines, where I look at really tech-centric companies and I see where this company can grow and where it could go. In terms of how they should approach me, again, it could be a warm intro. I think just to dovetail on Thomas's comment, if someone just met me and he starts introducing me to random ass companies, that really pisses me off. I have a lot of stuff to do every day, and just shooting over referrals will never help. And 99% of those emails I will never reply to. Sometimes I even put it in the spam box. So the best way to actually get an interaction with me is to be on the ground, build some great products, and make sure that you have a great product vision for where you want to go.
So if that's the case then for completely new entrepreneurs, if you're saying, if across the board you're saying that, okay, cold emails, cold intros are almost never going to work, you need warm intros, so they really have to be on the ground. So for newbie entrepreneurs from the very beginning, no hope of getting funding?
I mean, again, to extend on the comment of being on the ground, ideally, if you don't have any connections to me or some of my associates, you should at least make the effort to try to find me in events like this. That is probably the best way. It's like a second-ditch effort way of getting a good connection with the VC and really doing a heart-to-heart with them.
I mean, what I would throw out there is one big advantage Asia has in the startup community relative to Silicon Valley is it's much, much smaller. It's a disadvantage, it's an advantage. VCs, we're also their filter. If we give them a thumbs up, then they progress. And so I don't think you're alone. Even if you don't know anyone, you're just starting. Network with your peers and people that have gone before you, and get to know those guys. And the more you become embedded in this sort of entrepreneur ecosystem, the more investors hang around with us all the time. We're all friends, right? We all know each other. So it's pretty easy to get to investors here. You just don't want to send them a cold email because 90% of the time they won't reply.
How about entrepreneurs who are established in other fields that's not tech, and now they're making the jump to technology? How do you see them, Stefan?
I haven't really come across too many examples like that, but I would treat them. It would be like an advantage, obviously, if they have startup experience, even if it's in different fields. So it just is a plus. But then you kind of assess, okay, are they going in the technology space because it's the hot thing right now? Or are they truly passionate about what they're doing? Do they really, are they passionate about the product they're building? So I probably would test much more that, why are they now, changing to a different sector?
So, I mean, going back to the thing about being on the ground and cool emails, warm intros, when you talk about that, people always say you have to build a relationship, with potential investors, with your investors. So how does a startup go about doing that, building relationship? It sounds very qualitative.
Let me put a corporate venture capital spin on this. If you have a great product that maybe could have semantic linkages with my mother company, for example, you have a great marketing tool, or you have some kind of algorithm that allows you to see consumer trends, then again, relationship building is great, but also working with us at a business perspective is very, very important, and also gives me a lot of ammunition to actually invest in your company. So one company that I'll give a really great plug to is a company called Crake. So yeah, yeah, good guys, right? So I mean, they've done a great job working with us in terms of looking at how you actually aggregate and scrape data from different outlets, and kind of trying to put analysis behind it so we can see consumer insights. So us as an e-commerce platform can get better customers and merchants. So this is kind of one of the very good ways we can actually start a conversation with corporate venture capital firms. Like conversely, if you're talking to Intel Capital, maybe you have some really great technology behind CPU infrastructure and algorithm trending.
Yeah, are you, when you say relationships with your investors, do you mean post-investment or pre-investment?
Both. So I think pre-investment is interesting because you always say, okay, maybe right now you may not be raising funds, but you may be building something, but you kind of want to talk to, say, you guys and say, hey, I'm doing something cool in this exact space, and I'll be ready for prototype in 3 months. And then you update, the common kind of advice is that you update the person, the investor, in 2 months, 3 months, so that you show traction, and then when you actually need money, then they'll be able to give it to you. So
getting to know them beforehand is very important, keeping them updated, and being sure that you're staying on track to what you said you were going to do, because they will go back and check. And then when you go through the investment process, you get to know them really well. There's, both on their end and on your end, there's so much work that needs to be done through the approval process, pitching their partners, business model, the legal docs. And so you get to know them. Lots of late night calls as you go through each round of financing. You, particularly the founder and the investors themselves, and all of my investors I'm very, very good friends with. Not all of my investors get along with each other. It makes for interesting board meetings, but I like to feel like I'm the cog in the wheel between them all. And I have them over for dinner. I go out drinking with them. I teach them what Asia is all about at certain 4-story complexes in Singapore. So yeah, I mean, and all of my investors, except for the last one, Jafco, just because they just invested, have invested in me or in my companies multiple times. So by having them as friends, going back to them and getting more investment for this company or past or new companies is quite easy.
You see, when you talk about the four stories building, so give the audience some context. This is a building in Singapore where...
a mall, it's a mall.
It's a mall.
They have an equivalent here in Jakarta. I've been told, I don't know, but the equivalent in Jakarta is 7 floors and it's a hotel.
You know what we're referring to, yeah? Okay, so my question is a bit off tangent, but see, this is a very guy thing to do. It's a very male.
Oh, no.
No?
Yeah. My female investors, because you can go to one of the bars and say, okay, by the way, none of the girls here are actually girls. And for an American coming out from the US and experiencing that, they're like, wow, they're like the prettiest women in the bars. I'm like, yeah. So there's just cool stuff you can do. It's not like you're going there and buying hookers and doing all that like sketchy stuff, but you're just having fun, good time, and seeing it, drinking and doing something that you can't do back in San Francisco.
Okay, so female entrepreneurs also, you can do that, I guess.
I'm not saying start with that.
So we have one question from the audience. It's a great question. What is the most frequent thing startups do when they pitch that is the least important thing for the investors? Stefan? Or Simon? Or Tom?
Sorry, that is the least what?
The most frequent thing that startups do when they pitch to you, but it is the least important thing that investors look out for.
I often see like long-term projections. They want to go through a financial statement. What happens in year 5 to 8. It's often the earlier you are in the process, the more I'm interested in the person. I'm actually, the first meeting, I'll probably spend more than 50% of the time actually understanding the motivation of the person. Are they really do they really want to crack this problem because they have it themselves? They really want to change something? Or is it like opportunistic that it's a market opportunity they're spotting? So it's much more about, why do they start it up? And the business model can change, so much over time. you know, you look even at the biggest, you know, at Facebook, at Foursquare, at Twitter, it's very different products than initially it was intended to. So I'm actually at the beginning much more interested in a person, and often, you know, people right away show me Excel sheets, which in the first meeting, at least, I'm not as interested in.
This differs actually from stage to stage and the maturity of the startup he or she is in. Everything that Stefan says plus, for example, if you're just starting out looking at seed investments, if you have like a whole 3 or 4 deck sheets related to how you're going to make money off of it, to me that is kind of that's kind of a turn-off. I just want to see how you're going to grow your business in a meaningful way and give also user happiness at the same time. And for example, then you go into like a Series C or D funding round, and then if there's no actual mention about revenue or like whatnot, I kind of also see that as a red flag. So it really depends upon case to case and also company to company, vis-a-vis vertical to vertical.
The only thing I would say from the entrepreneur perspective is, unlike if you got that question in Silicon Valley, 9 out of 10 answers would be very similar. In Asia, you get 9 different answers if you ask 10 people. And the variance of what's important to each investor here varies quite widely. I've had some investors who've asked me for 5-year projections, and I'm like, what the fuck, that doesn't matter. I've had some people that want to get to know me as a person. Some people could care less who I am as a person. So there's a very wide variety. I mean, I had one well-established Southeast Asian VC come into the office, and I couldn't get past the second slide, and they wanted to go deep on which celebrities were using Bubbly and not, and just, they were like, there's like 5 of them, and they were all trying to like impress each other with their questions, and they were all like 2 years out of school. And finally I said, I just closed my laptop and I said, I just don't think this meeting's gonna work out. I don't think, I can't imagine you guys being on my board and I can't get past the second board slide for a half hour, and so I kicked them out of the office. Obviously they got really pissed off at me, but the reality is there's a wide variance. It's not a mature ecosystem when it comes to investors here. And so the best thing you can do as an entrepreneur is whoever introduced you to that person, or do some homework. Look them up online, see what they talk about. Every investor these days blogs. Talk to people that know them or work with them, and understand before you go into that meeting what they're really interested in, what they look at, what a Japanese investor is looking at versus a Chinese investor versus an Indian investor. Even Sequoia India, and the partner I have from Sequoia India versus Sequoia US, and the partner I have from Sequoia US, totally different worlds in what they care about. So doing that homework and knowing in advance is quite helpful in this context.
And yeah, Tom, you blog a lot for Tech in Asia too. Thank you for your guest contributions. So now going to another question, now it's a bit more industry focused. E-commerce versus social network. Which one is more realistic and doable? Stefan, e-commerce star, Rocket Internet Asia.
Yeah, so obviously with Rocket we built most of the e-commerce business models ourselves. So from the Global Founders Fund, we probably look less, to invest in business model which kind of replicate stuff that we already do. So we would more look into investments which kind of, in the payment space or, travel space, where Rocket, like historically, we haven't built any business models. So e-commerce, probably then speaking more on behalf of the whole venture capitalists, like certainly is a huge thing, where if you look at Indonesia, this will be like a 20-year trend, and we're just at the very beginning. So there will be like a lot of very valuable companies in that space. So probably for a lot of other investors, very interesting. For us, if we kind of have a model, we probably wouldn't invest. But if it's like more like a niche marketplace or some other consumer-facing transaction model, then it's very interesting for us.
Tom, social network. So e-commerce versus social network, which was more realistic and doable?
I think, so I don't think they're distinct. I mean, you've seen like Jishun, he invested in this company called Melee Xiao. Obviously, Richard and others can pronounce it better than I can, but it's the intersection of social and commerce, where it's driven by recommendations of your friends. And in that case, it happens to be beauty, but I've seen another company I'm on the board of is doing the same thing with travel. You can apply that model in many different areas. Pinterest is a great example of it, right? I think the two intersect quite a bit, and I think especially in hyper-social Southeast Asia, i.e. Philippines, Indonesia, Thailand, where you launch anything social and it takes off virally, that'll be very important. E-commerce in this part of the world has a ton of fundamental issues to get through. You know, the last mile, my friends at Redmart are solving the problem for delivery just in Singapore, which has the best infrastructure of all the Southeast Asian countries. Can you imagine when they start in Indonesia and have to commit to a 2-hour delivery window? Just payment challenges, 2% credit card penetration and paying. There's a bunch of things for e-commerce to take off that need to be solved first. So I think it's a longer term play. I think social and social media is a much nearer term play. Anything entertainment focused and virtual goods focused is much nearer term. But over time, I think the two intersect quite heavily.
And Semin, you just invested in Carousel. And also Rakuten, your parent company, bought Viki, video social network, so to speak. And Pinterest invested in Pinterest, right, in the US?
Yeah, I mean, it's as Thomas says, it's very hard to kind of bifurcate these two ecosystems because in a day and age like ours, it is very interrelated. So I would not like to continue on with the discussion vector of which one is more important, but how they actually interact with each other, especially versus what a developing market perspective looks like and what a developed market perspective looks like. I mean, in Singapore, there's a different dynamic where a lot of people are fighting for the same pie, and it's a quite limited population. And developing markets, as Thomas has said, we're dealing with a lot of the fundamental issues of delivery to stock and inventory and ERP and whatnot. So if you look at this in the long term, we will see a very, very interesting marriage of e-commerce and social. But for each of the markets and each of the developed sectors, they will marry in a very, very different perspective depending on culture and technology infrastructure.
So one thing, now let's go back a little bit to kind of the investing side of things. We have one more question from Jess. Is founder the most important aspect when VCs want to invest in a startup? I mean, you talked about it, you want to get to know the team, right, Stefan? And you talked about Tom, you talked about the various kind of investors. But so what are the qualities that VCs actually look for if you're talking about founder? Maybe Stefan, we can talk about that. Or Seaman, you haven't talked about what kind of stuff you're looking at. I'll throw it back to you again.
Oh, okay. For me, our investment thesis and hypothesis is continuously evolving, not only in terms of the fund size that we originally thought would be nominal, but now we're completely going for sky's the limit. But also, specifically what I'm looking at is more about the very tech-centric bend. I'm looking at how data is optimized, how it's compressed, and how also data can be actually secured so that we have more privacy in and around the world. I'm also looking at infrastructure between advertising technologies and platforms. And going a little bit forward, I'm looking also at fintech in terms of how payment infrastructures related to developing markets are going to evolve and going to kind of strike out as an event consumption platform.
I would say back in the Valley, there's sort of two sort of tracks. Some investors really focus on the founder and the founders and look for specific qualities in the founders. And actually, another segment, and I would say, one of my investors, Sequoia, leans much stronger onto this side. They look at the market opportunity. And their thesis is, if it's a really big market, you can make a bunch of wrong turns and still have a good outcome. And the founders, if they're not good, are replaceable. So I actually didn't start bubbly. I was hired by Sequoia, and I fired the founders on the second day. Sequoia's got some really prominent founders, and they've got, I don't know, a third of their companies that are run by someone else now. So they have a very strong network. Not everyone believes that way. You know, you look at a firm like Andreessen Horowitz, and it's all very founder-centric in the way they look at things. I do know when I get asked to be on a lot of boards or advisors, and I always tell the guys, look, let's date before we get married. Let's spend some time together. I gotta understand if I can add value and if there's a fit. And what I look for in the founders are, I want them to be sharp and analytical, but I also want them to be scrappy. And people think that starting a company is sexy because they read TechCrunch, but the reality is 9 days out of 10 it sucks. and you live for that one good day, and you're always getting punched in the nose, and there's so much, I mean, even for us, you know, there's been 3 times in our history where we're like out of cash, and I can't even show it. I gotta stay. You guys ever seen the movie Departed with Leonardo DiCaprio, where he's like, you know, the reason I survived in jail is because my hand, it never wavered. I never showed that I was nervous. When you're the captain of the ship, you got to be that way. You can't freak out and panic when things are going down. You just got to stay calm and know that you're going to get through it, or else everyone around you panics. You can't let your team know that things are going down, right? And you'll get through it. And what I've learned is, you know, every time shit hits the fan, you know, give it to the afternoon and something good happens. And just really enjoy the good moments, but don't get too down in the low moments and don't get too excited in the ups. Another analogy I think of, and when I look at entrepreneurs, and I see, living in Singapore, I see a lot of this with local entrepreneurs in Singapore, is it's cool, they do it, and as soon as they get punched in the nose, they disappear. You know, I had one of my employees, she's on the board of a company, and she came to me and said, hey, the CEO just resigned, he gave 3-day notice. I'm like, isn't the CEO the founder? It's like, yeah, well, you know, his girlfriend's parents said he can't date anymore if he's still running the company, if he doesn't have a real job. And so you get shit like this, it's just like, why are you in the business in the first place? When I boxed, before I went into entrepreneurship, the tryouts for the US team, you had about 1,000 people come out. You had professional football players, you had you know, tons of college athletes, military personnel, big, buff, strong guys, and we do 2 weeks of training, just calisthenics, hitting the bags, doing the fundamentals, and you'd lose about 10% of the people because training and conditioning is harder than most people think. But then we got in the ring on the end of the second week, and that one day you start sparring. The next day, 90% of the people never showed up. You can't tell how tough someone is until they get punched in the nose. And an entrepreneur needs to be able to get punched in the nose and get back up and keep going. And it's a quality that it's really hard to see until you've seen someone. Like, I'm really excited when someone comes to me and they've had a failure in their background and they're still doing entrepreneurship, because I know that they've got skin as thick as a dinosaur, and they're not gonna go crying home to mommy once the going gets tough.
Just to add on the element of the founder, because I work with quite a lot of founders along the years, and 2 things that I look for in people is, one, convincing skills, because as an entrepreneur you create something out of nothing. So you have to convince employees to join, you have to convince suppliers, merchants to sign up, partnership agreements, all kind of stuff. So if you don't have like this fire in your eyes that you can convince someone of your vision, what you want to build, it's really difficult. So, and if you're like a more quiet, like technical founder, that's fine, but you just need someone that on your team which can really convince people to you know, that you're building something big. And the second thing is, I see often it's very important that you're decisive and that you love to take decisions. And you have to make 100 decisions every day. Do I hire this employee after an interview? You know, what kind of terms should I offer to a supplier? It's so many decisions you have to take every day, and that's the exciting part. And if you're kind of afraid of like taking decisions, it's tough to be an entrepreneur. So I'm also trying to assess that, you know, if they really love making decisions and moving forward and executing.
So in the US, there's this thing going around that you say in a founding team you should have a hipster, a hustler, and a hacker. Do you think that applies in this region? In terms of focus on design and on all 3 kind of aspects of it.
I'm not sure about the hipster, but I think the other 2 certainly. Yeah, you need to be a hustler. You know, you create something new, and it's like, you know, you need to be out there. You need like a sales guy who's kind of making things happen out of nothing, and you need also the analytical person who actually thinks through things from time to time. So, not sure about the hipster, but the other one certainly.
Just grow like a ponytail, right, for guys?
Hipsters, shit. Okay, so that'll be my quote: "Hipsters, shit." But I think in any, this actually depends for me very much on what kind of vertical that you're actually targeting and trying to penetrate in terms of markets. And you know, in some perspectives, if you're doing complete enterprise, complete tech-centric, a hipster to a team in many ways, philosophically it really has no use. If you're trying to talk to carriers and you're trying to talk to like whatever, like Oracle, then getting a hipster is actually pretty detrimental to your company. But if you're doing like really consumer, fashion-centric, social network or something like that, yes, the hipster being of a mindset that is related to what the younger generation are doing, maybe will help you. But again, case by case.
So going back to investors, one thing that's commonly said in this region, some investors are afraid to invest because there's a lack of transparency, it's unclear, there's a lot of confusion, right? So from investors' point of view, when you're doing your due diligence, how extensive do you do your due diligence, and how are you concerned about how accurate the data is when you present the information to you?
You have a very varying spectrum, while we're probably at the extreme of lack of due diligence. So our tagline is we're like founders for founders. So each of us, the Summer brothers, Fabian Siegel, is like serial entrepreneurs. So we kind of don't want to bother people for 3 months of sending data requests about all kind of details. So it's a much faster decision making. Like we literally invested in companies like after the first meeting, we sent a term sheet and we sent the money on the next day. It can literally go that fast. So it's always kind of, if we would be the founder, what would have been the VC that we would have loved? So it's people with experience that have built businesses before, which have been in the same shoes. So in terms of due diligence, so many things can change. So we probably would do much less like financial due diligence or legal due diligence than probably more other Asian investors do.
David, any quick thoughts on that?
Again, due diligence really depends on the company that you're trying to invest in. If your company is completely based on the fact that you have some really great video matching technology, yes, I would like to see some back-end data in terms of how you built the technology, what kind of patents you have, and how you've actually serviced your clients. If you're building on something very consumer-centric, yes, I'd like to see your consumer metrics and how many people are downloading your apps and whatnot. But for our side, even because we invest relatively much less than the C and D rounds, we don't do a lot of due diligence. More so, we actually look at the founders.
I'm going to pitch it slightly differently to all three of you. So for Tom, as an entrepreneur, what are red flags do you look out for when you're pitching to investors? You mentioned earlier, like 2 years out of college and stuff like that. And then for the investors, for Stefan and Seamin, when entrepreneurs come to you and they're really good ones, how do you convince them that they should allow you to invest in that? So let's start with Tom.
Yeah, so it's interesting. If you look at VC returns historically, it's very concentrated at the top. Top 10 funds represent like 80+% of the returns. At least in the Valley, obviously it's similar concentration, different thresholds in other parts of the world. And the reason is, it's very clear after raising funds from all different tiers of VCs, the top guys tend to have successful ex-entrepreneurs look at them. Yes, there's a few very notable exceptions out there, but by and large, they've all got very significant startup entrepreneurial operating experience, and then they go into investing. And when I'm raising funds, I want someone that's going to be on my board that's been in my shoes before, and they can be a mentor and empathize and know what I'm doing and not give the most ludicrous, naive recommendations and just be talking to hear themselves talk. And there's a very big difference there. And so the top VCs who used to be in our shoes naturally attract the top deals. And so they get to see everything. So they have it's asymmetrical information. They know all the deals out there. They get to pick from the best. So naturally, the best deals coming to them. And their success rate of entrepreneurs, top entrepreneurs are going to have multiple term sheets. And the success rate of them accepting them on their terms. Like if Sequoia puts in a term sheet, I've accepted it twice now at half the valuation of a competing term sheet, just because of the individual that I would be getting on my board. And so you get better valuations, you get a better success rate, and then the long tail beyond that is scrapping for all of what's left over, right? And it's very painful to work with the long tail of people who are lifelong VCs who have never actually run a company, never built anything, and to try to respect what they're telling you to do when you know it's the most asinine piece of advice you've ever gotten is quite difficult. And so for me, trying to find someone that has been in my shoes, that's understands what it's like to build a company, can empathize, knows that there's going to be ups and downs, doesn't bug me for data when going gets tough. They're not bugging me every day for a bunch of data because look, it's not good. You're not going to want to see it right now. Let me get through this. And so that's what I look for typically.
So we were probably a good match.
Just pitching now, yeah?
So as I said, we're all previous founders, so it's not the investment banking backgrounds. So you have a very different mindset. If you have been there before, you kind of know what's in the head of the entrepreneur. So you want to help. You don't want to have this like endless data requests and KPI updates. It's actually how can we help you? The big benefit, obviously, of the Global Founders Fund is we have the Rocket infrastructure, so we can plug you in. If you have questions about online marketing, you get like a 1-hour call with our global head of online marketing, probably one of the smartest people in that field. You have a question how to set up the call center, we can send like our global head of the call center's operations. So that knowledge we have is huge. And it's also Rocket, we kind of build up this network now. We have, we're present in over 40 countries. So if you're thinking about expanding, that's pretty easy. We can set you up like, on a global scale. So that's a pretty unique setup we have with just, being on top of the Rocket infrastructure.
Let's talk about the red flags a little bit. For me, when somebody asks what can be red flags for when pitching, any and everything that you pitch to me can be a red flag, because when I say this, I reiterate that you need to have complete qualitative, quantitative, and a philosophical grasp of what you're pitching to me. So for example, if you're asking for like X sum of, let's just start from the beginning. Why do you even need the funding? And a lot of times, it's really funny, a lot of the startups that I talk to, their need for funding is not built out of an actual need to build something or go faster. It's more instinctual. They think it's a process that in order to go to the next step, they need to get funding. I'm in many ways shooting myself in the foot here, but ideally, if you're getting your shit done and you're really, really hitting your marks, you should actually not be raising VC funds. And Jesus, that's a bad statement to make. So that's one of the things. But also, for example, if you don't have a basic understanding and a philosophy of why you think your company is worth $7 million, $8 million, and I ask you that, and you can't give me a straight answer, that is more than anything a red flag, because I'm investing my money into your company. Not my money, but Rakuten's money into your company, and I exactly want to know why you want that. And that's one of the things that would raise a really red flag for me. Secondarily, what would be kind of the thing that, what would be my pitch to the founders and whatnot? I personally am not a founder. I've worked in several startups and also Google for the past 4 or 5 years. So in my case, I essentially know how a really, really big company that is still agile builds really good products at a scalable level. So I've watched that for the past 4 or 5 years, and I've been on the ground building the basic building blocks of those products. And also the fact that Rakuten has an ecosystem in Japan that boggles the mind. We also do marriage matching, horse racing, and whatnot. Oh, sorry, that's random stuff. But essentially, a lot of the connections that you want, if you want to actually penetrate the market in Japan, exist with our infrastructure. So that would be one of the strongest suits about. I can give you a little bit of guidance in terms of pointers of how a product should or could be made, and also the connections that our company, as in Rocket, makes for the success of the founders.
Okay, so thank you so much, gentlemen. We actually have one last question on failure. I think it's a great topic.
That's the way to
That's the way to cut me off. Oh my god. So thank you so much to the audience, and thank you again, gentlemen. Thank you very much.